Hi, it's John Davis here with another of my videos to help you and your business get through the coronavirus crisis. And today's video is aimed at the retail, hospitality and leisure sectors. Those are businesses with shops, bars, cafes, restaurants, cinemas, live venues, gyms, hotels and B&Bs. Now this is one of the first sectors to be really hit by the crisis as people started to slow down going out and shopping until actually all the venues are actually closed by Boris and now on lockdown. Of course, none of us can go to the shops unless they are vital. So that means there's no income coming into your business. So what support is there for you right now from the government? Well, the first support is actual kind of cash. The first thing the government announced actually was part of the budget was actually there'd be no business rates for you to pay on your venue until April 2021. That's a whole year of relief on paying any business rates. Now, in addition to that though, and perhaps even more valuable right now, there will be a direct grant to you if you are the rate payer on your premises. If the rateable value of your premises is less than £15,000, you'll be paid £10,000 by your local authority to you in April 2020. If the rateable value is over £15,000 but less than £51,000, that grant will rise to £25,000, again payable directly to you by your local authority in April 2020, just when you really need the cash. Now this grant as well is actually payable per premises. So if you have, say, a couple of restaurants, each with a rateable value of £20,000, you'll get 2 grants, each of £25,000. The idea of these grants is to help you basically bring some income in and pay the costs you have, including some living costs for yourself during the months that you're closed. So that can be really valuable. One thing is just to check though that it is you who pays those rates. We have some clients who found out actually that they're paying the rates via the landlord, and that means the landlord is down with the local authority as the rates payer, which means on the face of it the landlord will get the grant, not the business. So please do check that. But generally speaking, in this sector, it will be you who pay the rates, and therefore you will get the grant if the rateable value of your business is less than £51,000. It's a bit of a blunt instrument in that it kind of jumps from £10,000 to £25,000 and then ends at precisely £51,000 of rateable value. After that, you get nothing. But the point is, I guess most of these things have been put together quite quickly, and overall is kind of quite a decent amount of money to be getting in, just at least tide you over. The next direct input is the job retention scheme. This does what it says on the tin to a large extent, and this is where, to avoid employees being laid off and made redundant, the government is willing to actually pay their wages for the next 3 months. What they'll actually do is pay 80% of the value of their wages during March, April and May. You will pay the wages to an extent as normal. It's up to you. You can pay 80% or you can top it up to 100%. You're allowed to pay 80% of the wages of your staff, and the government will refund that to you. Be done via an online portal, so there will be a cash flow gap between you paying your staff and getting it back, but that's how it will work. Now the rules around that are that for the employee to have their wages paid, they must actually be furloughed, to use the specific term. That means they can't actually be working in your business. Works really well in this sector, I guess, where if the venue's closed, the employee just isn't working, but the key is they can't be working for this to be funded. The government will fund 80% of their standard wage, and that's capped at £2,500 per month per employee. So, like I say, at most you can get at the moment, it looks like £7,500 if they're furloughed for 3 months. You don't have to furlough them for the full time. You can just, obviously, if things reopen, you can bring them back then and pay them full wage. But while they're off, the government will cover 80% of their wage, up to a maximum of £2,500 per employee per month. Okay, so those are the amounts of cash that can be paid directly to you. The other help is in cash flow. As I said, with a few of these, it's great that hopefully that grant will be paid in April, which is relatively soon, but whether it's the 1st of April or the 30th of April can make a big difference to cash flow. Similarly with the staff, you have to pay them first and then you get the money back a little bit later. So to help with the cash flow, the government have allowed you to defer some bills. The first one is your VAT bill. Any VAT bill due between March 20th, 2020 and June the 30th, 2020 does not have to be paid until the 31st of March 2021. Now, you will still have to pay it. They're not letting you off it. However, that will give you that cash flow advantage of actually not having to pay it till next year, when hopefully everything's open again, and obviously you've got through your busiest season in the run up to Christmas and put some cash aside to pay that VAT bill. Linked to that as well is personally, if you have an income tax payment on account due on the 31st of July 2020, you won't have to pay that until 31st of January 2021. Again, giving you 6 months to actually have a kind of a cash flow bonus as such. You'll still have to pay it, but just not now. Also linked to that is HMRC have been told to be more lenient and understanding about their time to pay arrangements. The time to pay arrangements have existed for a long time. To an extent they are if you're unable to pay any of your taxes, whether that is corporation tax, VAT, PAYE or income tax, is able to negotiate paying in instalments. At the moment there is a special helpline for this due to coronavirus, and HMRC are being kind of very lenient and understanding over the need to stagger some payments to them. Cool. The other one in terms of cash flow is that the government have introduced a loan scheme. It's called the Coronavirus Business Interruption Loan Scheme. Quite a mouthful there. With the idea that the government is actually backing some loans to help businesses who might not have the credit rating to get a loan normally to get that loan. Now, the government will pay the interest on the loan for the first 12 months to keep the loans at kind of a decent rate, and they're not charging any money to give that guarantee. Now, it would just be careful though over who ultimately guarantees the loan. Some lenders are requiring you to provide a personal guarantee on the loans. If your business can't pay it back, it does fall on you personally in your assets. Now, as of today, the 28th of March, the big four high street banks have stated they won't need personal guarantees for loans up to £250,000, but some of the other lenders who are operating the scheme do still require them. So please do just be careful and be very sure over who's ultimately responsible on paying this loan before you take one out. Having said that though, it could be a very good way of accessing money, and like I say, because there's no interest to pay for the first year, it could be a short-term thing that actually costs you no interest, just allows you to get some money now to repay once your venues reopen again. Okay. Aside from that, on the personal side, as well as the ability to defer your income tax payments to next year, there is the government have actually asked the mortgage lenders to actually offer 3-month payment holidays to individuals on their residential mortgages. It's only on your residential mortgage. It wouldn't work on the mortgage if you own your premises. It wouldn't work on that. It's purely your residential mortgage. A 3-month window of not paying anything back. Again, it's just you will still have to pay it back in the long run, but again, it's for a cash flow thing right now. Okay. Also, actually, on a personal thing, you could actually, if the venue is closed, you could actually furlough yourself and use the job retention scheme to pay 80% of your wages. Now, there has been a bit of debate about this, about whether owners of businesses can furlough themselves as a director of a limited company, because the rule of the scheme is that a furloughed employee should not be doing anything to generate revenue or also provide services to the business. Now, while your venue is closed, you won't be generating revenue, but you will be providing services. Now, as of today, the 28th of March, and things are moving quickly, it does appear from a few things overnight that directors will be able to furlough themselves and still be able to do their statutory duties as a director. Because that was the worry, really, that if you did anything, you couldn't be furloughed, and anything could include looking at the bookkeeping, paying some suppliers, approving that VAT return, a set of accounts, a tax return, and immediately disqualifies you. Now, some of the statements overnight have been that actually a director can perform their statutory duties but shouldn't really be doing anything else. Still opens up a bit of a discussion of whether you can do any kind of marketing work and prep for when you reopen again, and let's hope that kind of common sense prevails on that, because if the venue's not open, you're not really working, and therefore you should be able to claim 80% of the wages on that job retention scheme. So those are the main things available to you and your business in the retail, hospitality and leisure sector to help you get through this coronavirus crisis. As it's been a very kind of worrying time, and it's hit this sector quicker than anyone. Basically, it's this section, also travel, were hit kind of first, and now that everything's locked out, obviously just no money's really coming in. You may be doing a bit of takeaway, which is kind of great, but if your core business isn't bringing the money in, you do need some support. So in just in brief summary, so the direct cash is around the grants, around the rates, and the payments of your 80% of the salaries of your staff, but then there are a few schemes to help you defer payments to ease your cash flow over the next few months. You defer your VAT, your income tax, your residential mortgage, and also potentially get a government-backed loan. Hope you found that useful. I will keep updating the videos and posting more. Let's say today is the 28th of March, but things are moving very quickly, so please keep an eye on our YouTube channel. If you have any queries at all, please do get in touch. The details are just below. We'd love to hear from you, and I look forward to you seeing on one of the next videos. Thank you.